So, good afternoon, ladies and gentlemen. I want to welcome everybody for our today's earnings call and the highlights of the first quarter of 2025. Let us start with the presentation. As you can see in brief, the company in brief, Nabaltec is a medium-sized company in the chemical industry and a leading supplier of environmental friendly flame retardants and specialty aluminas based on aluminum hydroxide and aluminum oxide, is headquartered in Schwandorf, Bavaria. In addition to the main production site in Schwandorf, we have two other production sites in USA, namely in Corpus Christi, Texas, with Nashtec, and Chattanooga, Tennessee, with Nabaltec, as well as a distribution distribution department in Shanghai, the Shanghai Trading. In the 24 financials year, the group generated a revenue of 203.6 million euros and an EBIT of 22.3 million. With employees of about roughly 500 people, we are active worldwide, which also reflects our strong export ratio of 76.6%. Our sales department is supported by distribution partners and other partners as well around the globe. We have an operating at Schwandorf since 1973 and currently have a worldwide production capacity of 65,000 tons, as you can see on the chart. In general, we are diversified in two segments, in two product segments, as you can see in this chart, namely the functional fillers and specialty aluminas, which correspond to the product areas, product properties, and respective capacities as well. The growth driver for Nabaltec is primarily the functional fillers, as you can see on the revenue, with the product areas, which are the fine precipitated hydroxides for the cable and wire industry, as well as the boehmites and visco-optimized hydroxides for the application in lithium-ion batteries for the e-mobility. In the specialty aluminas segment, further development will initially be sideways due to the weak demand for the refractory industry. We created here a revenue of 55.6 million. Now let's look, have a more precise glance at the functional fillers segment. On this page, you can see the market segments for functional fillers and application examples for all of our products. The biggest market share with a revenue share of 57% in 2024 is definitely the cable and wire market, and is especially expressed by data cables, communication cables, and energy cables, which are currently the most important sectors or application for the good development in our market. In the battery market segment, in which the boehmite is included and as well the visco-optimized hydroxides are used, we still see a differentiated picture. Demand for boehmite in the moment remains weak, while sales volume for the visco-optimized hydroxides continue to rise. For the market segment specialty aluminas, you can see that the biggest share is with 41% still the refractory industry, but followed by the technical ceramics at 39%. Now let's move, and you can see as well there are certain different applications as well, but these are the two highlights and drivers for our specialty aluminum market segment. Now let's switch to the Q1 highlights as of 2025. The revenues in the first quarter amounted to 54.7 million, which is a slight improvement compared to the previous year's figures. Despite an increase in sales volumes of around 4%, namely 47,700 tons, compared to the same quarter of the previous year, revenues only rose by 1.2% due to the lower sales prices and changes in the product mix. The operating result, EBIT, decreased by 18% to 4.1 million euros compared to the prior year quarter. The EBIT margin decreased. The EBIT margin as a percentage of the total performance is 7.5% in the first quarter after a strong 9.3% in the year before. A good demand for most products in the segment functional fillers contrasts with a further decline in sales volumes in the segment Specialty Aluminas. Higher costs of energy, particularly gas and electricity, had a negative impact on EBIT in the first quarter of 2025. The earnings per share amounted at 0.3 euros, 31 euros compared to 0.39 euros in the first quarter 2024. As you can see, the net debt of March 31st, 2025, with liabilities to banks of 91.5 million were offset by cash and cash equivalents of 93.7 million as of the reporting date of March 31st, 2025. This brings the group net debt to minus 2.2 million, excluding the fixed terms deposit of 15 million euros. Now, how does it look in the functional fillers segment, the first quarter? As you can see, in comparison, revenue in the functional fillers product segment increased by 4.1% in the first quarter compared to the previous year's quarter. The sales volumes increased by 7.1%, while prices in the product mix fell by 2.7% still. Good demand for the fine precipitated hydraulics in the wire and cable market, and a significant revenue growth for viscosity optimized hydroxides for battery applications of about 80% to 3.3 million euros in the first quarter were the main two drivers for the positive revenue development. In contrast, the boehmite product area suffered a 42% decline in revenues compared to the same quarter of the previous year. At 4.5 million euros, the operating result in the functional fillers product segment is at the same level as of first quarter 2024, resulting in an EBIT margin of 11.3%. As I already mentioned, rising revenues of fine hydroxides and visco-optimized hydroxide products areas are the main and key drivers for the double-digit EBIT margin development in this segment in the first quarter. Lower raw material costs are offset by higher energy costs of gas and electricity. Due to the persistently weak demand for boehmites, for the product area was unable to make a positive contribution to the EBIT. Strong competition combined with a low market price for ground hydroxides at our subsidiaries Nabaltec in the USA is still the main reason for the lack of a positive result there. The capital expenditures in this segment functional fillers amounted to 4.6 million euros in the first quarter. Investments here count especially in the capacity expansion for our boehmite and visco hydroxide optimized products, continue to be are the main projects in this sector. Let's switch to the Specialty Aluminas. Here we see a little bit of a different picture in the moment. At minus 6.1%, the product segment remained below the previous year's revenue in the first quarter of 2025. Sales volumes decreased by 3.6% compared to the same quarter of the previous year. There is still a lack of impetus here for almost all products and in this segment. A slight increase in revenues of 2.4% in the reactive alumina product area was not sufficient to achieve a positive EBIT in this segment. As in the previous quarter, the EBIT margin in the Specialty Aluminas product segment was again negative at 2.5%, significantly weaker than in the same quarter of the previous year with an EBIT margin of 3.5%. What was the reason? Declining sales prices and higher energy costs were the main reasons for the unsatisfactory development in this segment. A strong capacity with overcapacity and weak demand on the market had a negative impact on both the sales as well as the sales volume as well as the sales prices. If you look at the capex in this segment, it amounted to 0.8 million in the first quarter of 2025. The largest part for this amount is dedicated to the expenditure for the general overhaul of our 2 rotary kilns, which we have already published a couple of times. Now I would hand over to Günther Spitzer, my colleague. I didn't introduce, sorry about that. Günther, please lead us through the profit and loss and balance sheet as well as the cash flow.
Yes, thank you, Johannes. Let's continue with the profit and loss statement of the group. Our revenues in the first quarter 2025 increased only slightly by 1.2% to 54.7 million euros compared to the previous year's quarter. In relation to our sales forecast for the whole year 2025, with growth in the range of 3 to 5%, we are below this range. We expect the growth rate to improve, especially in the second half of the year, partly due to selected price increases from the second quarter onwards. Sales volumes rose by 3.9%, but due to a change in the product mix, the average price in the first quarter fell by 2.5% compared to the previous year. Total performance increased by 2.7% to 55.3 million due to higher inventories of finished goods in the amount of 0.2 million and own work capitalized of 0.4 million. Gross profit of 27.4 million was at the same level as the first quarter of last year. However, the gross profit margin of 49.4% was slightly lower than the previous year's margin of 50.7%. Higher energy costs for gas and electricity were the main reason for the decline in the gross profit margin. EBITDA decreased by 1 million year-on-year to 7 million euros, which corresponds to an EBITDA margin of 12.6% after 14.9% in the first quarter 2024. Personnel expenses of 10.3 million in the first quarter were almost at the same level as last year. The personnel cost ratio from the total performance is therefore 18.7%. The expense ratio for other operating expenses rose from 16.7% to 18.1% in quarterly comparison. Higher currency losses and maintenance services are the main reasons for the increase. Depreciation ratio fell from 5.6% to 5.3% of total operating performance. Accordingly, the EBIT margin amounted to 7.5% in the first quarter 2025 compared to 9.3% in the year before. Functional fillers continue with a double-digit EBIT margin of 11.3% in the first quarter. Specialty Aluminas recorded its second consecutive loss after the fourth quarter last year with a negative EBIT margin of 5.6%. The EBIT margin in the first quarter of 2025 was minus 2.9%. Earnings per share amounted to 0.31. Now I come to the balance sheet at the end of the first quarter of 2025. Total assets increased by 10.1 million to 308.4 million compared to the end of 2024. This was primarily due to increase in cash and cash equivalents of 7.2 million. Property, plant and equipment increased slightly by 1.2% to 141.7 million. Other non-current assets in the amount of 15.6 million include a fixed-term deposit of 15 million euros with a term of 2 years and an interest income rate of 3.3%. Inventories decreased by 3.3 million to 44.6. This is a result of the reduction in raw material inventories by 3.6 million. Compared to 2024, cash increased from 86.5 million to 93.7 million at the end of March 2025. On the liability side, equity amounted to 154.9 million, a small increase of 1.1%. The equity ratio fell slightly to 50.2% due to the increase in total assets. Non-current liabilities of 125.3 million include provisions for pensions of 31.5 million and bank liabilities of 90 million. The average interest rate for bank liabilities was 2.8% in the first quarter 2025 and will fall to 2.4% in the next 6 months period. Current liabilities increased by 9 million and include higher trade payables of 6.5 million and higher accruals for personal expenses of 1.6 million compared to the end of 2024. Finally, a short look to the cash flow statement. Cash flow from operating activity of 12.9 million decreased by 18.8 million compared to the previous year. In addition to the decline of operating income in the amount of 1 million, this was mainly due to working capital effects. In the first quarter 2024, there was a fixed-term deposit which switched from non-current assets to cash and increased the operating cash flow by 15 million. Inventories decreased by 3.3 million. After deducting payments for investments of 5.5 million, free cash flow amounted to 7.4 million. The cash flow from financing activities is positive because in the first quarter, the paid interest income is higher than the paid interest expense. Cash amounted to 93.7 million at the end of March 2025. For the next slide, the outlook for 2025, I will give the word back to Johannes.
Yeah, thanks, Günther, for this overview of our profit and loss statement, as well as the balance sheet and the strong cash flow statement. I will give you now a short outlook for 2025 as we can see it of today. If my slide changes, here we are. How do we see the rest or the year in the outlook in forecast? We can see demand continues to be characterized by still short-termism and high volatility. For our most important product areas in 2025, these are the fine precipitated hydroxides as well as the visco-optimized hydroxide. Demand is good in the first few months of 2025. Based, of course, of the economy and industry-specific environment, we expect a revenue growth in the range, as we predicted it already, at 3 to 5%, supported by especially price increases from the second quarter onwards in 2025, as Günther mentioned before. On the earnings side, we expect an EBIT margin in the range of 7 to 9%. The lower EBIT margin in comparison to last year of 2024 takes into account the higher gas prices, as we mentioned previously, due to the long-term gas contract that has expired last year, and also the uncertainty of energy costs, energy prices for gas and electricity as well. As we mainly purchase momentarily on the spot market, we also have higher personal costs. Here, the tariff increases 4.85% from April onwards. and higher depreciation, which we expect due to the capitalization of fixed assets. And these will start and impact in the second half of this year. We are now at the end of the analysis of Q1 2025, and I didn't moderate that at the beginning, but you are invited now for a Q&A session on the Q1 earnings and the highlights of the financials. I would kindly ask you to tell us your name and your company. What we would not say if you have an online or a chat questionnaire, because this makes it a little bit more awkward for us. So Philip Sennewald would guide you through the Q&A session. I hand over to Philip.
Exactly. Thank you, Mr. Heckmann. As said, we would enter the Q&A session now. If you like to ask a question, I would kindly ask you to raise your virtual hand. Afterwards, I will give you the permission to unmute yourself and ask your questions. And the first question comes from Christian Santer from NuWays. You can unmute yourself now.
Hi, everyone. First question, maybe on boehmite. Did I understand you correctly that in the first quarter, boehmite as a product by itself was loss-making?
Günther.
Yes, this is correct. We saw a slight negative EBIT in our boehmite product area due to the very, very low volume we had in the first quarter 2025.
And is it mainly the missing fixed cost coverage, or is it also because the sales prices have further deteriorated?
The average sales prices are still very good in contrast to the competition. So we're missing the volumes.
And can you remind me how much was the volume below last year's figure?
Just a moment. The volume was 38% lower than the volume in the first quarter of 2024.
Okay, and then adding on to this, do you see any signs on the horizon that might change throughout the year, or would you expect this decline to continue throughout 25?
It's very hard to say at the moment because the picture is very, very unclear here. It can rise any moment. We have seen this last year, but momentarily we are very cautious on that. I wouldn't say it might decline even more. Momentarily, it's on this low level, but the picture is very, very hard to say because, as I said already in my last conference and also in Frankfurt, the problem is the Chinese market. We lost practically momentum in China, and we are highly dependent on the periphery of China, namely Korea, Japan, and as well as in Europe. And in Europe, we know how the picture is, how the whole situation is in the moment. That is, I wouldn't say that we are off the picture in China, but there's a strong competition, and I think in China we still have seen some overcapacity, but it can change from month to month.
Yeah. And then second question would be on the overall topic of price increases. Can you give us an idea of the range of price increases that you're implementing across the group?
Well, first of all, we only got a price increase pushed through on the functional filler side. We could not get any price increases on the specialty alumina field. And it varies this time because we did it's not over the whole group, so it's hard to say, but it's in the in the lower one percentage digit. It's not in the higher end, I would say.
Okay. And within the function filler side, last question for me: how would you rate the demand development in the US?
The demand development in the US, in principle, is very solid. We saw a quite a good development at Nashtec, as well also as Nabaltec, but we have a different picture in the pricing. Of course, like I said, or Günther said I said in the beginning here, that still the price situation is not so satisfactory on Nabaltec, and that's why we have to push that forward. By Nashtec, I'm very confident. It works very well. We see not yet any impact on tariffs or any consequences on whatever the new administration does, so to say that there is a weakening. But we watch it very carefully what happens in the next 3 to 4 months. Momentarily, we do not see a decline.
Right. Okay, thanks. That's it for now.
Thank you, Christian.
Thank you.
Thank you, Christian, for your questions. And for the moment, I do not see any more raised hands. So once again, if you want to ask a question, please raise your digital hand. We would wait another moment, I would say, to see if there are any more questions. And as this does not seem to be the case, there is one further question from Druf Gerberin from Otis. You are free to unmute yourself now, Druf.
We can't hear you.
We can't hear you, but I see that you are unmuted, but we can't hear you.
Can you hear me now?
Yeah, now we can hear you.
Okay, amazing. Thank you so much, Johannes, for the presentation. I just wanted to understand if you have already started with the price increase in Q2, and how have you seen demand, react following the increase?
We started April onwards. Now this is an ongoing process through the second quarter. That's, I would say, the full impact we will see probably in the third quarter then, depending. And up to now, it's hard to say if the customers react, because we are just going out there. And that's why we cannot really see in terms of the order backlog. I wouldn't say that there is an impact right now fully seen. This is always with this short-term notice order book, like I said, with the visibility so short, you cannot really differentiate if that's due to an impact. I wouldn't say momentarily this is a clear picture now. And
okay. Very clear. And in terms of energy price, I understand your contracts came to an end last year, so that resulted into higher costs. But have you seen energy prices maybe they evolve from the higher levels in Q1?
A good question here, Gerb. The good news is that the energy hike or spike in the first quarter is now down again. So the energy prices came back to I would say a level which is much better. What we did on the gas, we hedged some gas, 50%. We secured. On this energy, on the electrical power, we still float on the spot market. The main reason is that in terms of volume and price, the gas is our biggest component. So this was very valuable to us to secure at least for 3 months now. We will watch that onwards, and if there is a peak or a low, a ditch again, then we might secure even for a longer period. We watch it very carefully to go back and secure. We don't want to speculate on the lowest low price on either or on gas or electricity. If we feel comfortable, then we might lock in for a longer term. But I must also point out at this point here that the gas prices we see today, even at a lower end, are not comparable to what we have seen before the war in 2019, 2020, when we locked in our 5-year contract.
Okay, makes sense. And just a last question for me. So, if given the current uncertainty in the global macroeconomy, if things, I don't know, deteriorate or doesn't really improve, does that impact your CapEx plan?
No, actually, because the 2 projects which we made, or 3 projects, they are already on the road. They are already in progress. What we definitely do after the fact, once we have invested, and this was mentioned several times on conferences also, as well as in earnings calls, we have about 70 million at this time, with over a period of 3 years where we invest, which we are half done now. So definitely these projects are done and are undergone. But after that, we will come back by the end of 26. We go back to a normal maintenance capex, or at a pace or at an amount of probably 15, 16, 17 million euros, which we need to keep our assets operation running. That's all I can say. But the projects are already ongoing.
All right. Thank you so much.
You're welcome.
Thank you, Drew, for your questions. And again, if you want to ask a question, please raise your hand. Maybe 1 or 2 more moments. So as we are not seeing any more raised hands, I would say it's time to hand over to you, Mr. Heckmann, for some closing remarks on this call.
Yeah, thanks, Philip. I would. I know that we already published 2 weeks ago our last year's figures, and so it's a little bit close to the earnings call from last year and this year. I think that, and there was a conference in between in Frankfurt, so a lot of things have already been communicated. But I want to thank the audience, everybody here joining us for this earnings call for the Q1 2025, also in the name of my colleague Günther, for attending us, and thanks a lot for the questions. And we will hear or see in when we have the publication of the Q3 figures then, which is quite a bit late to November, but in between we have the Border Investment Conference, and we will have the preliminaries out in August then. Thank you very much again, and I appreciate if you join us for the next meetings. Thank you. Thanks to the team of NuWays as well.